Be Wealthy and Smart, episode 800.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the smart money leaving the market, because that's exactly what's happening. We're seeing this wide disparity between regular investors in the market, everyday people, and the big institutions, hedge funds, etc., getting out of the market. And this is tracked through a diagram called the Smart Money Index, and it has a graph of the S&P 500 and what the S&P 500 is doing versus what the so-called smart money is doing. And right now, it's showing a huge gap. You have the market high, and you have the smart money quite a bit lower. So it shows this open jaw, if you will, of a disparity of what's going on with investors in the market. So I found an article that I thought was pretty good to explain what's going on, and I want to share that with you. It was written by Kathy Lean on investing.com, and it says, pharmaceutical companies are making meaningful progress towards developing a successful vaccine, but according to the markets, it's just not fast enough. If we are lucky, a vaccine will be approved before the end of this year, but broad dissemination won't happen until 2021. In the meantime, new virus cases are rising at alarmingly rapid rates across the globe, causing panic for investors worried about a double-dip recession. Stocks sold off for the second day in a row as 10-year Treasury yields dropped 8%. The U.S. dollar sold off against the euro, the Japanese yen, and Swiss franc. Europe is headed for contraction in the fourth quarter, and the fear in U.S. markets is that America will follow. It could only be a matter of days before daily new virus cases top 200,000 in the U.S., even if Moderna, who says they will be releasing data over the next few days, shares good results. The ongoing outbreak could strain the hospital system, making it difficult to provide ventilators and other treatments that limit death rates. States are left with the hard choice of letting cases multiply or control the virus with new restrictions. Many have opted for the latter, including Chicago, which issued a 30-day stay-at-home advisory and asked residents to cancel Thanksgiving gatherings. Detroit canceled in-person learning, and New York ordered restaurants, bars, and gyms to close at 10 p.m. and limited gatherings to 10 people. All of these measures have negative consequences for the economy, and unfortunately, tougher restrictions across more states are expected. I just want to pause there and say, definitely here in California, they're saying we have over 1 million cases, so that is going to be what we expect to have happen here as well. The article goes on to say, for all of these reasons, it's no surprise to see risk aversion return. Consumer prices also stagnated in the month of October instead of rising 0.1% like economists anticipated. Federal Reserve Chairman Powell said Congress and the Fed will need to do more. Investors didn't like the White House's decision to step back from stimulus talks and President Trump's plans for an executive order that would ban Americans from buying or selling stocks of certain Chinese firms. We expect risk aversion to persist with further losses for US dollar, Japanese yen, and other high beta currencies. Surprisingly, euro was one of the only currencies to outperform the US dollar. Despite significantly weaker German industrial production, the ongoing virus outbreak and German Chancellor Merkel's warning that restrictions could be extended into December, the single currency has been remarkably resilient. Anti-dollar flows is the only explanation because the outlook for the Eurozone is grim. On November 2nd, all entertainment facilities, restaurants, and bars were ordered to close except for takeout, Large events were canceled and a work-from-home advisory was issued. In France, hospitalizations are higher than their peak in April, with one person being admitted to the hospital every 30 seconds due to COVID. If this trend does not improve, they may have to take further measures, all of which are disasters for the euro. Yet the worst performing currency on Thursday was sterling. This decline is not surprising considering that the UK is on lockdown as well. Brexit talks are going nowhere, and third quarter GDP and UK industrial production numbers were weaker than expected. 1 week into the lockdown, daily new virus cases rose to its highest level ever. It typically takes 2 to 3 weeks for restrictions to have a meaningful impact on case numbers. Next week, we'll get a better sense of whether the UK government needs to take further action. All three of commodity currencies also succumbed to selling, with the Australian dollar leading the slide on the back of Chinese-Australian trade tensions. End of article. All right, well, there you have it. There's a lot going on, and that may be causing larger institutions to get skittish and decide they want to protect their profits for the year and get out of the market. It is an uncertain time and nobody really knows what's going to happen. And everybody probably is remembering March and thinking, well, remember what the market did last time we closed down, so maybe we better get out ahead of that in case the market decides to fall again. So we have lots of reasons for pessimism, but strangely, the sentiment indexes are still on the greed side. So that means people are really more complacent, especially the individual investors that are still in the market and are causing this different disparity in the open jaw gap that we're seeing in this diagram of smart money. Does the market have to fall before investors decide to get out? Well, that remains to be seen, but it could cause a panic if people all decide to run for the door at the same time. So we'll have to see how this all goes, but I'm glad that we are sitting in cash and precious metals and crypto waiting to see what goes on with the market as we see it's making lower highs and hasn't closed above prior highs, which can also indicate that maybe we're in a downward trend for now. Certainly valuations are still very extended, especially in technology companies, and that's why we're seeing the rotation from tech into small caps, travel companies, airlines, cruise lines, and things that have been underperforming for this year, but are still at a bargain and a huge discount to where they normally sell. Add to that the election confusion and lack of clarity, and that uncertainty might leave investors uncertain about what moves to make right now. We will be watching and reporting back to you on the latest and any changes that occur, but one thing's for sure, even though the vaccine announcement was initially big news in the market, that news petered out pretty quickly since nothing is definite in terms of when the vaccines are going to be available, if people want to take the vaccine, if they're safe, etc. A lot is still unknown, and you add those unknowns with the election, with valuation, well, we'll just have to see what happens next. If you haven't yet subscribed to Be Wealthy and Smart, hit that subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And if you'd like to get my weekly email, go to lindapjones.com and sign up for my email list where I give wealth tips, mindset advice, and overall insight to financial freedom. And if you're looking to get your finances back on track, check out my book, You're Already a Wealth Heiress, Now Think and Act Like One, 6 Practical Steps to Make It a Reality Now. It tells you everything you need to know to get your finances back on track, make sure you're doing all the right things, and even includes a millionaire action plan showing you exactly what to do to make your first or next $1 million. It was rated one of the best all-time wealth books by Book Authority, and men love this book too. It's available at Amazon and Amazon.uk or any bookstore. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.